Hello, this is Dr. Bhushan Shanbhag. Welcome to the part B of the video series, how to use the moving averages. In part A, we have already seen from 5 EMA how far away Nifty typically goes. Now let us see the other two averages which we have discussed in part A but not in details. So let us see the details here, that is 10 EMA and 21 EMA. Now 10 EMA, this data is actually spanning way back from 1st January 2001, and I consider this more important data. You will find Nifty has gone more than 5% away from 10 EMA only 1.6% times. 3 to 5% away, it is on the upside I'm talking, but around 8% times. 2 to 3% almost 12% times. 1 to 2% 20.8% times. 0.5 to 1 10.5% and 0 to 0.5 10.7%. And on the downside, 0 to minus 0.5, it is around 8.76%. Minus 0.5 to 1, 5.54%. Minus 1 to minus 2 is 8.48%. Minus 2 to minus 3, 6%. Minus 3 to minus 5, 4.4%. And more than minus 5 down, it is around 2% of the days. Now, if you consider the data is from 1st January 2001, it's last 22 plus years of data. Right, naturally 5,500 plus days I have studied in this data itself. And whenever we talk of 5.5%, okay, 5.5% when we talk of 5,500, 5% of that is actually very small, right? Now that also, when we talk of major bear markets and all, for several days Nifty is below this level. Okay, now let us see how far away Nifty is going from 10 EMA. 21.5% times it is 2% plus or minus away from 10 EMA. So almost 78.5% times it is within plus or minus 2% range. Only 12.5%, yeah, this is upside, and downside is, upside is 21%, downside is 12.5%. 66% times it remains between plus or minus 2%, which is good 2/3 number of times. All right. More away Nifty goes from this range, greater is the probability it will fall back within this range. And that is why fairly tradable signals, and actually 5 EMA gives relatively more number of what I will say fake signals, or it doesn't come back that fast. But for 10 EMA it works much better. Okay, how are we going to use this for trading? If Nifty is more than 2% away from 10 EMA on either side, there is higher probability it will catch up with 10 EMA, either coming back towards 10 EMA or going flat. So we can be bullish or bearish against the recent price moves, which is more likely to be profitable. From 21 EMA, we find something different, that it easily goes away more than 3% away from 21 EMA on both the sides. So 5% times it goes 5% or more on the upside, 13%, 15%, as you can see, more is the probability. In fact, remaining 0 to 1%, it's only about 15% times it's in that full 1% range. On the downside also, say more than 5%, it's 3.22% of times. 0 to minus 1%, it is barely 11.5% time. So only 26% roughly times it is plus 1 to minus 1%. More likely it will be away from it. Okay. So how far does it go? Significant lengths of time it remains away from 21 DMA. And actually the signal is not very tradable. So when we compare 5-day, 10-day and 21-day, actually 10-day gives the best of the signals. 5 EMA is the second best, and 21 is not that greatly tradable. Okay, so which is the most important? 10 days EMA is the most important, then comes 5 EMA, but there are too many fluctuations. And 21-day average is slow, but deviation from these averages are very high. So how do we use this 10 EMA for trading? You require some patience. Okay, 10 EMA means you should be ready to hold a position for 10 days. Then it will be profitable. So as you can see, how many times Nifty goes above or below 10 EMA, it has limits. If we exploit these limits properly, we can make money easily. Because Nifty usually does not cross this range. It does not go above 2% high or 2% low 66% of times. So what will happen if you sell a call 2% out OTM and sell a put 2% OTM? 66% of times both are going to ultimately give you money by the time of expiry if it is 10 days away expiry. Okay, 10 days or more. More than 66% chances they will remain OTM only, and both will give you money, call as well as put. But if you consider the premium received, it adds something more, and more than 75% times the strategy as a whole, short strangle, is likely to be profitable. Okay, and that is a good percentage. 75% times you are going to make money. So clearly it indicates, should Nifty go 2% away from 10 EMA, it is more likely to move closer to 10 EMA again than going away from it. Always keep in mind the probability of Nifty closing more than 2% away is only about 1/3 times. So automatically your probability of profit is double that of probability of loss. More than double in fact. That's almost triple. So going it more than 3% away from 10 EMA is only about 19% times, up or down in either direction. So that is how you can trade EMA. When Nifty is away from it, take the position in the direction of 10 EMA, and more often than not you will be profitable. Okay, so that's all in EMAs. More you are going to study we are going to study the next technique in the next video. Thank you.